All right, ladies and gentlemen, hello, my name is Darius Anucauskas, and I'm the Chief Market Analyst here at Markets.com, and today is the 23rd of July, 2025. So look, I just wanted to quickly share with you a little piece here on US dollar index because we are at a very interesting spot here from the technical analysis perspective. Look, after we found resistance near my 50-day EMA here, shown as the green line on a daily chart, we started drifting back down. And during several videos, I mean, before I kind of said already, and that I'm still bearish on the US dollar. I'm still bearish on the US dollar just because. Again, the U.S. doesn't need a strong dollar at this point because we need to continue selling, or the country needs to continue selling weapons. So not only weapons, of course, in general, exports, but weapons is a big factor. So when your produce is cheaper because of the currency weakness, and for other governments, for other countries, it's cheaper to buy your goods, Now, look. Of course, for now we're watching the situation in general with the Fed, and we understand that next week we're getting the interest rate decision where no action will be taken. Most likely, we're in September. We're waiting for that interest rate cut by the Fed, but July. At the end of July next week, we're not really expecting anything. Of course, the criticism will come in from the White House in terms of like, oh, why? But I think that the Federal Reserve is trying to stand strong in a way because, well, the reputation is on the line. So for now, if we're not really expecting the rate to go lower, then the U.S. dollar could kind of bounce around somewhere around this area. So in the near term, we could actually, if we do drop below the 97 mark, I'm going to lean a little bit more towards the downside. However, like I said, it's going to be a little bit of a tricky one. But if we're going to understand that for sure we're going to have a cut in September, I think that there could be some more weakness to come in the US dollar. So again, keep your eyes on this one. It could be quite interesting, but at the moment, from the very short term perspective, like I said, yes, the 97 mark is the interesting area. I mean, at the moment, I'm watching this 97.14, but in general, basically, it's never the exact level. It's always the area around that level. Because for me, the upside scenario would need to have would be if we would see a push back above the 50-day EMA, above this 98.65 zone ish, somewhere around there. If we can get that move above that, then yes, great. I will consider some higher areas. But at this point, yeah, I'm leaning a little bit more towards the downside. However, of course, there was another little idea that I was thinking about was to see maybe a possible inverted head and shoulders pattern here, with the left shoulder being here, the head, and maybe the right shoulder. Look, even if it's going to form something like that, still I need to see a break of the neckline, which is basically around here. So either way you look at it, yes, a breakout is still needed. So for now, I'm leaning a little bit more towards the downside, but again, being very careful. And if we do drop below that 97 territory, I will aim for that 96 zone right here, where we found support in the beginning of July. So long story short, ladies and gentlemen, keep your eyes on this. Also, keep your eyes on the ECB interest rate decision tomorrow. For more details on that, you can check out my other videos. I've done those on TradingView and on other social platforms. So, look, thank you very much. I hope you found it useful. As always, stay safe, have your stop losses in place, risk only what you can afford to lose, don't overtrade, and everything will be fine. I'll see you later. Bye.